Welcome back to the Black Blockchain Summit. We are having a great panel coming up. In search of a happy medium, will Wall Street embrace Bitcoin and alts or blockchain and NFTs? And before we dive into this delicious topic, I want to introduce a great panel of experts that are going to help us navigate through some of the interesting intricacies of that question. And so I want to start first with Leah Wald, who is an economist with an expertise in asset management, focusing on value investing. We have Esco Abang, who is a senior software engineer at Airbnb and formerly at Uber. And as I like to say, if you ever got picked up a ride or got a food or drink delivered to your house, thank that man. And we have Gerard Newkirk, who is the CEO and founder of Genesis Block and also the founder of KWH Coin, a blockchain energy tech company. So before we get into the topic, I want to give each of you just a quick minute or two to just talk about your background and just kind of introduce yourself. So Leah, why don't you start?
Sure. Thank you so much. And thanks for having me here. This is really exciting and an exciting panel. So especially to be with these panelists today. So my background, I started my career in the Sub-Saharan Africa region of the World Bank, working for the amazing Obia Zek-Wesley. Continued to work in the development industry, as well as for an activist investing hedge fund. Then went back to the development industry. Started my first tech company when I was 24, called Veterati, which connects unemployed veterans to mentors in service of job placement. And then joined Bitcoin Asset Management full-time with Lucent Investment Strategies. I then co-founded Valkyrie in 2020, which is a crypto asset manager with a series of products in capital markets. So thank you again.
Yes, I'm a senior software engineer based in New York. I actually started in crypto in 2009. I was working on a startup when I was in college. Basically, it was an app store. We can sell things, and we were looking into it for a way to have cheaper transactions for apps. That didn't work out, but we kind of got caught wind of crypto, and I stayed with it throughout my career. Like when I went to Uber, I actually left Uber at the time to do a crypto startup, which didn't work out. And I kind of been in and out for a while, working on different projects like early door train and stuff like that. So yeah, I've been in the industry for over 11 years now, professionally, even longer than that as a hobby. And thanks for having me. Looking forward to jumping into the conversation.
Gerard.
Yes, sir. Good afternoon, everybody. I'm Gerard Newkirk. My career in the space started actually about 2014. I started at KWH Coin, which was set out to connect over 1.2 billion people in the world that didn't have access to energy to a software platform that could connect them to distributed energy resources. They kind of graduated from that into my company now, Genesis Block, which is focused on supporting entrepreneurship, particularly in minority communities. We're working now on developing kind of digital identities for local entrepreneurship. And we built out an ecosystem to support that here in Wilmington, North Carolina. And we do a lot of our work east of 95. We focus a lot on marginalized communities and how we can connect them to the opportunities that we see in this space and also to advancing entrepreneurship. So I'm very excited to be on this panel. And thanks for having me.
Great, great. So I want to start out by going back 3 years ago and want to talk about MicroStrategy, which is a publicly traded company that made a significant investment in Bitcoin, about $250 million, and they've been accumulating more since then. And their CEO also at the time came out and made a strong statement advising other publicly traded companies that it was a prudent idea to add Bitcoin as an asset class for their treasuries. And so I want to just talk about what's happened since then and how that has influenced Wall Street. And when we say Wall Street, we mean not just the companies that work on Wall Street, but the publicly traded companies, how they are now participating in Bitcoin and blockchain. So Leah, maybe you can start out and frame that for us.
I think it was a very important movement, I should say moment and movement. What was interesting about what MicroStrategy specifically did was add it to their treasury. So I think that there was a paradigm shift for companies and even publicly traded companies to understand that this could be used for treasury management, that it was an actual store of value and therefore could be allocated to their portfolios again from the institutional level. I think that even trickled down to the retail investing public as well as other money managers across the space who looked at, Paul Tudor Jones or Mass Mutual or others, again, insurance companies. That's huge. And they're understanding that, again, this is an asset that could be invested in like any other asset, could be included and incorporated into your portfolio like any other asset, and it could be understood. So I think he was a real pioneer.
It is like any other asset, but it's not like any other asset in terms of how how it's handled. And obviously the mechanics are very, very different than publicly traded stocks. And it speaks to the difference in blockchain in terms of its decentralization. And so maybe you guys, Esco and Gerard, can also speak to that, how technology kind of sometimes rips up the old road to pave new road. And is that what's going on here? And how, the title of this panel is Happy Medium. So is there a happy medium for the old ways and the new ways when it comes to incorporating crypto into these companies?
Yeah, I think we've seen that with JP Morgan. The CEO Jamie Dimon publicly kind of bashed Bitcoin for a while, and then all of a sudden they're working on their private Ethereum called Quorum, and now they have a JPM coin, and now over $300 billion has actually gone through that blockchain. So we can see there's clear benefits that's being seen by the naysayers are actually on board now, and that's because the technology is very legitimate. Let's not even talk about cryptocurrencies, which are like could be investment vehicles. Let's just talk about blockchain itself. It offers an opportunity to have faster settlement times because you have a standard protocol on all sides globally. And then you have all these ledger, which reduces the amount of complexities around auditing and security and compliance. There's a lot of clear benefits, and there's a reason why all these firms are looking into this. Like PayPal just came out with a stable coin. We have the JPM, by the way, is a stable coin as well. They use to basically redeem dollars when they do transactions. There are so many clear benefits from that side of the thing that I'm not surprised. And the other day, an analyst from Bank of America, they said they believe that stablecoins are going to be continuing to adoption and be integrated deeply into the financial system. So that's a clear signal to me. The big players, JPM, Bank of America, who are integrating and looking that this is going to get more adoption. And that's because the actual utility of it, not just a speculative investment.
And, I'll start. Thanks for that, Sco. I was kind of a purist in forms of the decentralization point. I was a cypherpunk, so I was probably in the late '90s, early 2000s, one of the first people that was thinking that we could use this decentralized technologies to empower, the have-nots, if you will. I was part of the whole Occupy Wall Street movement in that sense. Is that how can we use this technology or this blockchain technology to lower the risk and also to enable more people to participate into the economic system? So I think that there is a balance. I love the adoption that's happening. We're working on a project now called DICE, which is Diversity and Clean Energy, where we are building these digital identities so that we can connect more minority companies to the global clean energy value chain. And in this particular project, I see a lot of value add because we can use the ledger system and we can use, energy is a little different. These energy companies don't want to exchange their data for obvious reasons, but we can use the distributed ledger technology to provide some level of a basis for a platform that we can all interact in an environment. So I love the level of adoption that's happening. I think we still need to keep in mind that this is a decentralized technology and that its intent was to empower individuals to be able to not have to use the major banking systems and all of these other conduits because of the challenges that we had. So I love the fact that we're beginning to marry it. I also stay on the side of we need to maintain the use of its initial intent was to empower individuals so that we can kind of make sure that we don't lose sight of that.
Do you feel as we go through this trend, are all of what we're seeing still decentralized? Are stable coins actually decentralized? And I know we're seeing a Ripple getting favorable treatment from the government, but is Ripple really decentralized? So does that meet the criteria that you've been looking for?
I was in some of my technical guys, probably a little bit more value add again. I think that what's happening with Ripple, what the challenge has been is there hasn't been a structured framework to know how we're going to operate and use this technology. So for that, I think Ripple is going to be what we kind of like the baseline, and we can build off of that. So I think we've solved that problem. I guess for me, where I would like it to remain is that as we begin to do all of the assetization and all of the other different funds come in that are beginning to be a part of the cryptocurrency ecosystem, that we don't lose sight and put all of our eggs into one basket like we did before with the existing financial system, and that we maintain some level of decentralization, if you will, meaning we use the distributed ledger system more as an accounting framework, more for its security, rather than turning it over to another organization. We can get into the same troubles that we have before. So I'm just, if that kind of clarifies it a little bit.
Yeah, what are your thoughts on the stable coins and the projections is that that market is going to continue to grow. PayPal stepping in is certainly another benchmark in terms of a company of that size getting in there. And I think maybe PayPal addresses some of the concerns of some of the other stable coins, is like, how stable are they? I think we have a better idea of how stable PayPal is. Some of the others like Tether, it's like, so what are your thoughts, Leah?
I should preface, maybe on my answer on the last one, I sounded like a Wall Street shill, but that is not the case. Let me just put that out there. So I think that stable coins have immense utility, and maybe I'll start there. I'm working with a startup in Latin America, and they provide a P2P marketplace for stables. And what they are doing and seeing in Venezuela and other countries with high inflation is they're actually DCAing, so dollar cost averaging, into stables, which is something you don't often think about. But the utility of actually using stable coins as an inflation hedge for their currencies that they don't believe in will stay within stability bounds is fascinating to me. So I think that from the Wall Street perspective, there's obviously very interesting use cases such as the JP Morgan Chase coin or USDC, and that's true. Now, I hope that they stay decentralized, and I hope that, again, it does provide power to the marginalized people who are trying to be their own bank. But I believe the utility of stable coins are very powerful and important. There's issues around Tether, and it has depegged. USDC has depegged. Now, that is dangerous in regards to confidence. And there is a centralization element to both coins and to most stable coins that must be considered. However, this is the beginning of the developments. Now, Bitcoin is still nascent in its future, in its development. So I hope that that's a technology we can continue to build on, because, again, to be able to transact, use stable coins, how that could be used in the remittance corridors for diaspora communities, again, cross-border transactions, that's where you can see a lot of utility beyond inflation hedge and using it as a store of value. And again, for other countries where you see communities who need to leave their country based on human rights issues, stablecoins can be very helpful too.
What are the implications of stablecoins for the U.S. dollar itself? Just in terms of, I mean, stablecoins are basically a surrogate currency for the dollar. Does that impact dollar usage? I mean, I know there's been a lot of talk about the dollar being depegged in the petroleum industry, but the fact that stable coins exist, it kind of means that the dollar is still very, very important, and yet it's currency that's not actually being held in the dollar. I want smarter. Yeah, back to you, because I'm not smart enough to answer these questions. You are.
Well, we have these brilliant panelists. I'll take a quick stab. I actually think that the general public lost a lot of confidence in the US dollar and in how the Federal Reserve and Treasury have been printing money. So even though that's absolutely true, how often do you bring cash to a cafe? I was at a farmer's market last week and they didn't even accept cash, of all places, right? So
you were mad.
I know, exactly. So I think that your broader question is, how important is it while we're still using dollars as a unit of account, as you know, the global reserve currency, et cetera. I think it's only going to become more and more important to countries that also use dollars, such as El Salvador, such as other countries around the world, as their legal tender in order to have other options. And in the United States, again, if we continue to see the inflation we've seen in the past couple of years, I think it's also going to be really important. And the question is, what does it then become pegged to? And, you know, how do we start determining the economics behind what becomes more stable that we're most comfortable with?
You know, and I think with our coin, KWH coin, we kind of, the whole thinking behind it was to peg it to the production of 1 kilowatt hour of energy. So the whole concept is to peg it to productive capacity. You know, and this is me personally on my own soapbox. I think one of the problems, one of the challenges that I see in cryptocurrency is that we're now shaking money sideways, thinking that it's long, because we're essentially attaching, we're creating more vehicles or more finance. The problem, I think, was the financialization of the economy. We've gotten so far from productive capacity, especially in the United States, that we've been kicking the can, and all these things are debt driven. So actually our dollar system is really a fiat system, as we all on this know that it's debt based. And I was looking at the report, all of the financial reporting that came out here this morning with the CPI and the PPI, which we look very closely to, because a lot of our work is with reshoring. So these are companies that are coming back to get closer to domestic markets. And so we're applying the blockchain technology to create these kind of micro networks of production, pegging the currency to the production that's happening versus to an alternative system versus to going outside of the ecosystem. Our strategy has been to build the productive capacity within networks and then use those currencies as conduits to facilitate more trade, whether it be cross-border or whether it be a lot of the companies that we're interacting with are in Western Europe. We have a major offshore project that's happening here off of the coast. So we're trying to create that ecosystem that we can have quick exchange. But to really get back to it, I think what's the trend that I would like to see is we begin to start to peg to things that we can quantify with production versus continuing to go down this pegging it to currencies that we were creating this to kind of detach from.
We're going to keep you on your soapbox because I think that's I think that's the forward thinking for what Bitcoin and blockchain technology should be about. I think we went through a phase where there was a lot of driven by speculation when it actually ran up, and then there was a phase of people trying to chase what happened 2 or 3 years ago, and then it didn't happen. But when you peg it to an actual use case and a more targeted micro economy, then it just makes more sense. And then it's not going up with the ups and downs of just just asset classes, because it's really pegged to what's going on in that economy. And I think that makes a lot of sense. I think it's less volatile, and it's more productive in terms of enabling economies that have not been able to participate in the larger economies to develop this without interference from the other economies. We shouldn't, countries shouldn't have to catch a cold when the US economy sneezes, so to speak. So and Esco, what are your thoughts on this from your engineer's perspective? Because you said your lens from this has been coming through the technology, and again, going back to my question of how the new technologies kind of rewrite the old ones. What's your perspective on this?
Yeah, I love stable coins actually. And to your other question around how I think it's going to affect the USD, I think it actually helps support the USD because all it does is get rid of access. So the demand can be fulfilled by, especially globally, access to USD. They are inherently centralized because basically, if you want to off ramp and get the dollar back, you rely on the institution that's holding that dollar. So it's not to Gerard's point about let's not forget about the decentralization. Definitely support that because what we're talking about is a happy medium. At this point, at a stage where there's a balance between centralization and decentralization. So when we come to JPM coin, that's on a private blockchain. as permission. So it's not centralized, but it's providing utility within that organization. So blockchain cryptocurrency isn't limited to just decentralization. I think it's a tool that can be used in many different ways. And by using it in this stepping stone, in this stepping stone way, we can get support for it financially from different institutions and also legally from different governments to help spread adoption to where now the decentralized players can have more standing and less liability from other players. And I think from the technical side, like I still from the financial side, when it comes to the way that we transfer coins, liquidity pools and decentralized exchanges are kind of rising up as an alternative to these traditional institutions that block access. Leah was talking about how the people who are in foreign nations, they're using the stable coins to DCA into it to protect their own income, their own wealth, because their own currency may be experiencing hyperinflation and so on. So decentralized exchanges could play a big role in that in order to give them access, because other institutions are blocked off from giving them access to that. And then you just have to deal with the regulation at the off ramps and the on ramps. So I think that's where technology can play a role in helping give access to different people. And also because stablecoins are, as compared to Bitcoin or Ethereum, they're relatively low risk because they're backed by an asset, people could be more willing to contribute them to liquidity pools. And liquidity pools are, you can think about them just like if you have a stock market, you have a bunch of stocks that are available to trade against other stocks. Like people are just putting their funds into these pools. And because you're not really worried about the volatility risk, there's not as much of a concern. So you can offer yields that are relatively low risk and have all of a sudden much cheaper transaction fees for remittances and other things like that. So yeah, I think stablecoins are very, although may not be decentralized, they're still using blockchain technology, and that is still providing a lot of utility.
So we only have a few minutes left. I want to give everybody a chance to just make any kind of final comments that you want. And since we started with Leah, I'm going to go back to you.
I think maybe the only last comment I would say, and taking from our other panelists, Gerard and Esco, we're early still. Even though we've seen Bitcoin develop and other coins develop, we're so early. So as long as we continue in the space, continue building, continue educating, continue to learn, who knows what the future actually holds. So whether DEXs become the ultimate reality and traditional finance middlemen are cut out, we finally see remittances take off in the way that we thought it would. All these different beautiful visions that we have, we're early and we could still build into them. So I think what we see today is one reality that's incredible and full of optimism and hope. Some realities that I think we need to ensure don't come to fruition in ways that can be harmful. Those may be CBDCs that we need to, watch very closely. But the future is very optimistic, and we're early. We're early.
Yeah, I'd say there's a lot of negative stories around the cryptocurrency and tokens in general. A lot of people have been bit because they've lost money in recent years, and a lot of regulators are shouting at the rooftops about scams and things like that. But the problem is, I think, lack of regulation. Like even going back to when the stock market was first created in the early 1900s, there were tons of scams, and it wasn't until regulation came in place where now people have a perception of it being legitimate. So a token can represent anything. It could represent a super scummy speculative startup who's trying to promise the world, or it could represent traditional companies like actual equity in traditional companies or real estate or anything when it comes to NFTs, like anything really. So this perception around blockchain or cryptocurrency equals scam, bad, stay away, I think it needs to go away. And that can only happen when we have other regulators speaking the truth or understanding what's going on, working with these companies to have clear regulation to allow them to invest more heavily into it and to provide actual protections for the people.
Gerard.
Yes, sir. Yes, and thanks, Bob. And I concur with Lee and Esco. It's very early in this whole process. I think I'm excited now because so many of the projects that we're working on now, we're working with GE Hitachi, who's building a major nuclear energy plant down here, and they got to have proof of where all of the items and the goods are coming from. So as Esco was saying, we're going to have these blockchain applications or use cases that when you create a micro economy or micro network, it's going to be so functional and so high value add. So I still see the best days for the space are going to come now, especially, we did a survey and about 86% of CEOs said that they're going to bring some component of their manufacturing or some component of their production capacity back to the States. So that, in my mind, is going to now provide us with the framework to have more exciting and more economically driven use cases for blockchain. And I think the biggest explosion is going to be really in the next 3 to 5 years with it. So I'm excited about it. I guess I'm a glass half full type of guy anyway, but I'm really excited about what's happening in space and what the opportunities are.
Well, I'm excited as well. I want to thank the three of you. I can't predict all the future, but I do predict that all three of you are going to have an interesting role to play in what's coming down the pipe. So thank you so much for joining us at the Black Blockchain Summit. And for those of you listening, stay tuned. We have a lot of great panels to go.